Hey there, money mavens and financial newbies alike. Welcome to Buffett's Billionaire Playbook, investing tips for the rest of us. Today, we're diving into the world of investing with a little help from everyone's favorite billionaire next door, Warren Buffett. Now, I know what you're thinking. Isn't he that super rich guy who still lives in the same house he bought in 1958? Yep, that's the one. And let me tell you, this man speaks the language of smart investing like no one else. So, whether you're looking to secure your future, save for a dream vacation, or just stop your money from playing hide and seek in your sock drawer, buckle up for a wild ride through Buffett's brain. But first, let's talk about why we're channeling Warren Buffett. Picture this. You're at a fancy investment gala, and in walks Warren Buffett wearing a risk tolerance lower than your grandma's hemline. That's right, folks. This man has the financial caution of a turtle wearing a seatbelt, and I'm here for it. When it comes to planning for the future, Buffett's 20 to 30-year outlook makes my "what should I make for dinner next week" planning look positively short-sighted. So, let's dive into some Buffett wisdom that's going to guide us through this investing jungle. First up, we have the buy wonderful, not cheap principle. Buffett says, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." This gem has been my real estate mantra, and let me tell you, it works. It's like dating. Sure, that super cheap fixer-upper might seem tempting, but do you really want to spend your weekends dealing with a leaky roof and questionable plumbing? In the stock market, this means looking for solid companies with strong fundamentals, even if they're not the cheapest stocks out there. Think of it as investing in the straight A student instead of the class clown. Sure, the clown might be more fun at parties, but who do you want managing your money? Next up, we have the know what you're doing principle. Buffett wisely states, "Risk comes from not knowing what you're doing." Oh, Warren, you speak to my soul. This is why I'm not investing in anything I can't explain to a 10-year-old. If I can't make it make sense over a bowl of Cheerios, it's not going in my portfolio. Cryptocurrency? More like crypto confusing to me. This principle is all about doing your homework before investing. If you can't explain what a company does or how it makes money, maybe it's not the best place for your hard-earned cash. It's like trying to bake a cake without knowing the ingredients. You might end up with a financial fruitcake that nobody wants. Now, let's talk about the invest in yourself principle. Buffett says, "The most important investment you can make is in yourself." He's not just talking about money here, folks. He's talking about learning, growing, and becoming a better version of yourself. It might mean taking courses, learning new skills, or even just dedicating time to improve your health. Remember, you're your own best asset. It's like being the Swiss Army knife of investing. The more skills you have, the more valuable you become. Moving on to the plant trees for the future principle. Buffett once said, "Someone's sitting in the shade today because someone planted a tree a long time ago." This is all about thinking long-term and understanding that the best investments often take time to grow. It's like planting a money tree. You can't expect to shake it for cash the next day, but with patience and care, it'll bear fruit for years to come. Now, here's a fun one. The be greedy when others are fearful principle. Buffett advises, "Be fearful when others are greedy and greedy when others are fearful." This is his way of saying don't follow the crowd unless the crowd is running away from a bear. Then definitely follow the crowd. In investing terms, it means looking for opportunities when everyone else is panicking and being cautious when everyone's going gaga over the next big thing. It's like being the person who buys winter coats in summer. You might look weird, but you'll be cozy and financially savvy when winter hits. Last but not least, we have the price versus value principle. Buffett says, "Price is what you pay, value is what you get." This reminds me of the time I bought those designer jeans on sale. Sure, the price was great, but did I get value? Not when I couldn't breathe after eating a sandwich. In investing, we're looking for companies that offer real value, not just a tempting price tag. It's about finding stocks that are worth more than their current market price, the investment equivalent of finding a hidden gem at a yard sale. So there you have it, folks. Warren Buffett's wisdom distilled into bite-sized, easy-to-digest pieces. Remember, we're in this for the long haul. We're not looking for get-rich-quick schemes. We're looking for get-rich-slow but steady plans. As we embark on this journey of investing, let's keep these Buffett principles in mind. 1. Look for quality investments, not just cheap ones. 2. Understand what you're investing in. 3. Never stop investing in yourself. 4. Think long-term. 5. Be contrarian when it makes sense. 6. Focus on value, not just price. We may not become billionaires overnight, but we'll sleep better knowing we're making smart, informed decisions. And hey, if all else fails, we can always fall back on my tried and true investment strategy, convincing ourselves that our streaming service subscriptions are actually investments in entertainment. Netflix and skill, anyone? In all seriousness, investing doesn't have to be scary or complicated. With a little wisdom from Warren Buffett and a healthy dose of caution, we can all become savvier with our money. Remember, the goal isn't to get rich quick. It's to build wealth slowly and steadily over time. So start small, stay consistent, and who knows? Maybe one day you'll be giving financial advice while still living in the same house you bought decades ago. Dream big, invest wisely, and may your portfolios be as stable as Warren Buffett's haircut. Until next time, this is me reminding you that in the world of investing, slow and steady wins the race. Unless you're Warren Buffett, then you win the race, buy the racetrack, and still drive a modest car. Happy investing, everyone.